We have the management of PG Electroplast now joining us on the program. Second quarter numbers have come through, and I think for the second straight quarter, they've upped what they said they will do for the full year FY25. After Q1, I think there was a bit of a lift. After Q2, we've seen something similar as well. Vikas Gupta is Managing Director Operations at PG Electroplast. He's with us. Mr. Gupta, good morning. Good to have you with us here. Thank you for your time. I mean, this is the definition of what people or investors want to see. Quarter on quarter, you're raising what you think you'd do for the full year in revenues and profits. Describe to us, the business environment. Is it getting better and better? Just take us through segment-wise prospects as well, what you've seen.
So good morning, Prashant, and it's always a pleasure to talk to you. What we see, like we have revised our guidance for revenue to 4,250 crores. So we see a very strong momentum and very strong order book for us in all our product categories like air conditioners and washing machines and air coolers. And the overall revenue growth is driven by our focus on our product business. So when we break down our revenue guidance of 4,250 crores, I think almost 3,000 crores will come from product business, in which air conditioners alone will be almost around 2,450 to 2,500 crores. Washing machines will give almost around 450 crores, and air coolers will give almost around 70 odd crores. And then our electronics segment will also give us almost around 300 to 350 crores. And molding should give almost around 900 crores. So that's a breakup of our revenue guidance of 4,250 crores.
Okay. What is sort of making you most confident? And can you give us a little more color on the product business itself? The product business contribution came down from 75% to 54% quarter on quarter. So, I mean, as all the business lines continue to fire up, what will the mix be? And what is giving you the optimism on this higher guidance?
So please understand, as we are entering the AC season and we have a very strong forecast from all our clients, we have already recently added new capacities on our plant in North in Bhiwadi. Then we have further expanded our capacities on our plant in Supa in Maharashtra. And the kind of order book that we have and the forecast, so we are very optimistic on upcoming AC season. So we have already tied up for our numbers till end of March. So that looks very good. And washing machines also, we have added quite a few clients and we are further expanding our capacities in washing machine business as well. So we are quite confident on those numbers.
All right. Hi, Mr. Gupta. The numbers look good. You have raised your guidance. Good on you. But what about this QIP you've announced? Couple of questions out here. By when should we hear this QIP announcement? When do you intend to raise money by this fiscal year?
So, good morning, Nigel. So, yeah, we are looking to raise this money within this financial year. Okay. So, basically, we are trying to see, because we are seeing a very strong growth momentum and there is a increased working capital intensity. Though largely to fund our working capital requirements, to further fund our capex requirements, we are looking to raise some funds.
Okay, so no inorganic growth.
So as of now, no, but we are open to all the ideas.
Give us further clarity then. This money that you'll raise, will you be using it for backward integration? Or are you looking at a segment where maybe volume growth will be okay, mid-sized, but you'll see better margins? If you could give us some clarity on what's the thought process.
So, Nigel, please understand the basic purpose of raising this money or funds is to largely fund our working capital requirements. And regarding the margins, we have already given the guidance on margins also. We have upward revised our net profit guidance to 250 crores. So the margins also look quite robust that way.
So it'll be better than what you're doing currently. This this more money that you're going to be raising and then trying to scale up the business.
So we are not factoring in our revenue in our revenue guidance this QIP money. So we can't talk about that right now.
No, but I want to understand, you must be having a minimum margins, minimum ROC, some threshold that you'll be having in mind, right? When you put in money, What could the potential asset turn be? The returns that you'll be looking at?
Oh, so regarding the QIP money or the further capex that we do, or any kind of allocation of capital, we have a guardrails already defined. We are looking at the asset turns of at least 4 to 5, and maybe around the ROC of around 18 to 20%. So that is the minimum kind of guardrails that we have going for any kind of capital allocation to new project.
I got it. Because, I remember this was last quarter, maybe the quarter before, you'd said that you were looking at entering an allied line of business. Apologies, I want to confirm that. Has it already been announced, or are you still looking?
So we have not announced anything on that. That is still on the paper, and we are working very actively on that. Maybe in coming few weeks or maybe coming few months, we will be making some announcement on that.
Okay, and that's going to be done organically. I mean,
yes, definitely.
okay, all right. We'll leave it there. Thank you very much for your time. Good speaking with you, and look forward to that announcement, as you said, next couple of weeks or maybe a month or two.